And now for something completely different.
It's a rich world.
Forget everything you've been told by others before. Get ready for the real deal, the full story, real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts, presented by RIA Advisors.
And welcome to the show. This morning. It's Tuesday as we get ready to kind of push through the week here. Lots of news going on today, right? So lots of news here. This morning, of course, well, I should say yesterday, actually, Jerome Powell was renominated as Fed chairman. Big news. Of course, it was a toss-up between Jerome Powell, who is really dovish, and Lael Brainerd, who's even more dovish in terms of being, on terms of monetary policy and keeping interest rates low and making sure financial markets have plenty of liquidity. Joe Biden says that he went with continuity in this case because Jerome Powell did a great job, following the pandemic crisis, and so he wanted to keep continuity for the markets and the economy right now. So he renominated Jerome Powell. Now, of course, Jerome Powell has to get confirmation from Senate, and Elizabeth Warren is already opposing his nomination, saying that he did too much to deregulate the banks following the pandemic crisis and gave them too much leeway, in particular, giving them the ability to do a lot more in the markets to take advantage of consumers and investors. And of course, we know the stories of Wells Fargo is kind of a good example of what she's talking about. So she's opposed to that. There's also some other senators who are also opposed to Jerome Powell as well, but not enough really to block his nomination at this point. So for all intents and purposes, Jerome Powell was renominated Fed chairman yesterday. Now, the interesting thing here, though, is that Jerome Powell has already set a path and basically agreed to a path of hiking rates. In fact, right now, the financial Fed funds futures market, and that's the market that actually kind of predicts what Fed funds will be, are predicting in a 90% probability of 3 rate hikes next year. Now, historically speaking, and Michael Leibowitz has written an article on this on our website just not too long ago, just a couple of weeks ago. It's on our website, realinvestmentadvice.com, talking about the fact that historically the Fed funds futures market underestimates what the Fed will actually do. So if the Fed funds futures markets is currently predicting 3 rate hikes next year, 4 or 5 may actually become the reality. And that's just looking at historical trends and tendencies that occur. Now, what does that mean? Of course, that is a tightening of monetary policy. And that's the one thing that the markets have depended on up to this point. And that's why yesterday, if you took a look at the markets were doing actually fairly well and actually had broken out to all-time highs about mid-afternoon. And precisely at the time that Jerome Powell was renominated as Fed chairman, the markets actually spiked to an all-time high. And so that was great. Then about 5 minutes later, the markets figured out that he's going to be tightening monetary policy, beginning by tapering the balance sheet. And as we talked about yesterday, lots of conversation here from different Fed members suggesting that the taper might need to move faster because of inflationary pressures, and that would get us to rate hikes even sooner. So again, markets didn't like that much and wound up selling off yesterday afternoon. So we'll see how the markets kind of process this over the next few days. Markets are down a little bit this morning, not too much. Tech stocks taking it mostly on the chin because of higher interest rates and less liquidity means less money flows into those areas in particular. Other news this morning, of course, the White House is now discussing releasing oil from the strategic petroleum reserves. And of course, that's got oil prices under a little bit of pressure this morning. Again, more supply into the markets, bring those gas prices down, right? Couple of things here that will be problematic. First of all, it's not a function of the fact that there's not enough oil, right? So we have plenty of oil. We've just done a lot of things under this current administration to block the production of that oil. Of course, there's been just ongoing attacks on oil and gas companies about production because we need to go to cleaner forms of energy. So there's a lot of concern about producing, and we have not seen, even though with elevated oil prices, we have not seen rig counts come up dramatically here, increasing that supply. A lot of reasons for that, but releasing strategic petroleum reserves are not going to fix the problem. When you're shutting down pipelines and doing things like that to restrict supply of oil, that's going to be your problem, and those are sustained problems, and that's not going to be fixed. Now, Joe Biden has called on the Department of Justice to investigate price gouging by oil companies. Let me clear something up for you real quick. Oil companies do not set oil prices. Oil prices are set by the NYMEX, which is the mercantile exchange where we trade commodity futures. If oil companies set their own oil prices, they wouldn't need to hedge for future delivery. That's why major oil companies have entire divisions of their company dedicated to trading the futures market and hedging their product delivery so that they can maintain their prices when they can get them and hedge against potentially lower prices. And just think about this, if oil companies set oil prices, then how did oil prices go negative right after the pandemic, right? I mean, that wouldn't have happened. I mean, no oil company's going to go, hey, I guess what? We're going to set our oil prices negative because we just want to lose money this month. It doesn't work that way. Oil prices are set by commodity traders and futures traders, and that's who it is. So going in and asking the Department of Justice to investigate ExxonMobil for price gouging is stupid, and it shows you just how undereducated the politicians are running this country are about how the financial and economic system works. And this is why we keep getting really bad policies. Releasing strategic petroleum reserves is fine. I don't have a problem with it. It's not going to solve your problem. The problem is that you have done things politically, chasing this climate change agenda to restrict petroleum production. And that's going to be your problem, not just today. It's going to be your problem from now on. The more that you continue to move to non-efficient forms of energy and electricity production, the more problem you're going to have with the production of oil and gas, which is where a majority of your electricity and energy come from down the road. So think about that. All right, quick break. We're going to come back and we're going to get into a few things here this morning. We do need to talk about the markets because, again, Santa Claus rally. It's coming up, right? I mean, just right around the corner. But is it just going to be an uphill climb from here, or is there potentially some risk here that we might get a correction in the next couple of weeks, or did it actually start tomorrow? We'll talk about that. Also, as we're kind of looking forward economically, we're having some really great economic numbers here. Consumer spending has been extremely strong. In fact, we've had some of the strongest consumer spending since World War II. I mean, it's pretty amazing how much we have going on. But of course, a lot of that was due to the fact that we were sending just massive amounts of money into the economy. But what happens next? That's really the big question here. And as we get into 2022, expectations from financial analysts, really kind of all across Wall Street, are that the rally in the markets are going to continue. In fact, Goldman Sachs has now set a 5,100 price target on the S&P, currently trading at 4,700. So tack on another 400 or 500 points to get there. It all sounds good. It all sounds very bullish. But is there other concerns that we need to be thinking about? So one thing on the website this morning, we have our post out this morning talking about the Santa Claus rally. What we're going to talk about coming up next, I've actually got an article written about it as well with all the charts and the graphs that go along with it. That's on the website right now, realinvestmentadvice.com. And make sure while you're there, sign up for our daily commentary. You'll get it every morning by email before the market opens. And it gives you kind of everything you need to know about the day, what's coming up, what expectations are, and what to be looking for in the markets. That comes out every morning at 7:30, delivered right to your email inbox, get you ready to go for the markets. Simply go by the website, realinvestmentadvice.com, sign up for our daily commentary right there at the top of the page. We'll take good care of you. Be right back after the break. I'm your host, Lance Roberts. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Retirement's not what it used to be, and long-term care could enhance your golden years. The question is not whether you can afford it, but whether you can afford not to have it. Our next virtual Lunch and Learn will cover the management of long-term care expenses that could make or break your retirement. Join Jonathan Penn and Chris Liebum for the basics of long-term care. Register at realinvestmentadvice.com for our virtual lunch and learn on long-term care. December 9th at noon. RealInvestmentAdvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets, and unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN, or again, simply online at realinvestmentadvice.com.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
And welcome back to the show this morning. So, interesting headline, by the way, this morning. You know, so I was actually talking to my wife about this the other night. Is that, this, the whole vaccine mandate, everything that's going on, why is there such a problem, right? Why are so many people so hesitant about, getting the vaccine, et cetera, that we're having to go to these links? And I just thought it was interesting because this morning there's a headline out. Even Reuters is tripping out over the 55-year delay of the release of the Pfizer vax data. So in 55 years, if you want to find out what the actual testing analysis was for the vaccine, you'll find out in 55 years. That's when they'll actually officially release the test results. So I don't know what that means, but these are why people don't trust stuff that comes out of the government. I'm just saying. 55 years, I'll be dead. I hope. Only be I don't know. I could make it to 111. They may have to prop me up. Be like kind of Bernie, Weekend at Bernie's.
Be Weekend at Lance's.
Exactly. Just kind of propped up in the corner. Why do you have him sitting in the chair with sunglasses on? He's just waiting on those Pfizer vax details. They're coming any day now. Of course, we're still waiting on the JFK assassination documents, right?
There you go.
Those got delayed till next year. They were supposed to be released this year, the CIA files.
Yeah.
The Biden administration pushed that off until next year. So we're still waiting on that. So in 55 years, we may be pushing that off as well. So we'll see. This could be the next great conspiracy, right? National Treasure 3, the search for the facts data.
Along with an inventory of Area 51.
Exactly. Oh, we already know what's at Area 51. I mean, Independence Day Chapter 2 told us that story, right?
That's true. Yes.
Right. So we already know what's at that. So anyway, all good stuff. A couple of things. All right. So we're talking a little bit about, just for the break that, the Santa Claus rally's coming. And I wrote an article today. It's on the website. Discussing the Santa Claus rally. And look, there's a lot of people banking on the Santa Claus rally. And look, if you take a look at investor sentiment right now, it's very high. The number of people that have been chasing options, right? So call option speculation is at an all-time high. And most of that's retail investors, a lot of it. I shouldn't say most of it, but there's a decent chunk of it is retail investors using call options to chase financial markets because honestly, they've been taught there's no risk. If I just buy something, it tends to go up in price and I can leverage those upside bets by buying call options. So, I can take a few, rather than say, as a good example, right? In order to buy 100 shares of Amazon, as an example, for most people, that's too large. That's too much money, right? I can't buy 100 shares of Amazon because it's a $4,000 stock, whatever it's trading at. So putting 40 grand or 50 grand into a stock is just too much money for a lot of people. But I can, for a couple of $1,000, I can buy a call option on Amazon, and I get the equivalent of owning 100 shares of Amazon, because that's what a call option is. So, and if you don't understand options, and let me just give you a quick kind of primer here without going into great detail. All a call option is a contract, and there's call options and there's put options, and there you can do a lot of things with them, but all options in general are contracts to buy or sell a security at a certain price at a certain date in the future. So, in other words, as an example, Brent, wants to buy Amazon at $4,100. I'm just throwing out numbers, okay? And I've got Amazon shares that I own at a much lower cost, and Brent's willing to pay me $10 a contract for every 100 shares I own. So he's going to pay me $10, and I'm going to get that $10 a share. And I'm going to give him the right to buy those shares from me in March of 2022 at $4,100. Now, here's the thing about this. If the shares of Amazon are above $4,100, or in this case, that's called the strike price. If they're above $4,100, Brent can call me and let's say the shares go crazy. They're $4,500. Well, Brent can call me and have me deliver my shares of Amazon to him at $4,100. So immediately he's got a huge gain on his position, and he spent $10 a contract for doing that. If the contract doesn't get to, or if the shares don't get to $4,100, then the contract expires worthless. Here's the key point: the contract expires worthless. The $10 that he paid me, I keep. And I still keep my shares. So Brent loses the entirety of that investment. And that's the important thing here to understand. Options are an all or none game. It's not a partial game. Considering, and this is assuming you hold things to maturity, right? But either the contract will mature in your favor or you will lose all your money. It's an all or nothing bet. Like playing poker. And this is why they're very speculative. You get a lot of leverage for using options contracts, but you also have the very large potential of losing all of your money. In fact, historically speaking, if you go back over time, the percentage of contracts that expire worthless are very high. I've seen numbers range anywhere from 80 to 90%. I don't have the exact number, but they're very high. Most of the time, these contracts expire worthless. And look, there's lots of good uses for options. We use options in our what we call our platinum portfolio here at our shop for higher net worth individuals. We use it for hedging. We use it for risk mitigation. We use it for income, right? We write calls on certain positions that we're willing to sell at a higher price to collect the income. So there's some very good benefits from using options in portfolios to hedge risks, to reduce potential loss, to create income. Options can be very beneficial for that. Options can be used for speculative purposes, betting on prices to go higher, and that's okay. It's just important to understand what the dynamics of the game are. Right now, there's a lot of retail traders that are trading options that really don't understand the implications of trading options. And that they stand to potentially lose a lot of money if the market corrects very quickly. And it happens. Happens more than you think. So, that's what I'm saying. You got a lot of speculation in the markets right now. So expectations are by the end of this year that this market's just going to keep going up. So the point of the article today is simply talking about the Santa Claus rally, which is the last week of the year. The Santa Claus rally generally occurs between the day first trading day following the Christmas holiday and the end of the year. And that's generally because mutual funds, pension funds, hedge funds, money managers, etc., are all repositioning for that end of year reporting. So right after the end of the year, everybody has to send out their annual reports. This is what our fund did last year. Here's the positions we own. And they want to make sure and have all the right positions on their portfolio, right? So they want to own the Teslas or whatever. They may not have owned it all year, but they buy it in the last 5 days of the year. So when the report goes out, it says, hey, we own Tesla, right? Whatever it is, whatever the hot stock is. This is what we call window dressing. But because of that window dressing, you generally get this rally in the last few days of the year. Now, does it always happen? No, it doesn't always happen. 2018 is a good example. It happens often, but it doesn't always happen. So right now, the expectations are this market's just going to keep going up this week and next week and the week after and the week after that, and we're just going to be at higher highs by the end of the year. There's a few things, though, that are going to be occurring over the next 2 weeks that maybe could apply some pressure in markets. One of the things we talked about is mutual fund distribution. So before we get to the end of the year, where mutual funds begin to window dress their portfolios, they've got to make their annual distributions. Now, in a market where you've got very little liquidity, and you've got very little volume, which is what's been going on lately. And breadth has been extraordinarily weak in the markets. Any additional selling pressure could put some downward pressure on prices in the next 2 weeks following Thanksgiving. And as I told you before, what happened yesterday in the markets, what happens today in the markets, don't even pay attention to it because it's Thanksgiving week, nobody's around, everybody's gone. Trading is basically run by inmates running the asylum. We've talked about this. The point, though, is next couple of weeks, there'll be some additional selling pressure that, with the market that's already internally very weak, may lead to a decline in prices. That will be your setup to position for that end of the year Santa Claus rally. Now, is that a guarantee that if you position for Santa Claus rally, it will come? No, it's not. But the odds are very high that it will. So it's a worthwhile bet to position your portfolio for it if we get some weakness over the next 2 weeks. Now, if we don't get any weakness over the next 2 weeks, then just sit where you are. But any type of corrective action we get, and look, there's plenty of historical precedents that in the first 2 weeks of December, you typically get a bit of a sell-off. And again, nobody's expecting one, so that even makes it a higher probability that we may see some weakness over the next couple of weeks, given the current kind of extent and deviation of markets from moving averages and overbought conditions. So that article is on the website. I go through all of it, where the break points are on the website now, realinvestmentadvice.com. When we come back from the break, got some other stuff to get into this morning. We'll talk about the strongest consumer spending, and are we going to get another spending bill next year? Goldman Sachs thinks so. We'll talk about it when we come back from the break. Don't go away.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
Retirement's not what it used to be, and long-term care could enhance your golden years. The question is not whether you can afford it, but whether you can afford not to have it. Our next virtual Lunch and Learn will cover the management of long-term care expenses that could make or break your retirement. Join Jonathan Penn and Chris Liebum for the basics of long-term care. Register at realinvestmentadvice.com for our virtual Lunch and Learn on long-term care. December 9th at noon. realinvestmentadvice.com.
Have the market's gyrations made you nervous? If so, it's because you have more risk in your portfolio than you realize. It's time to reevaluate your long-term investing strategy with RIA Advisors. Our disciplined approach can help eliminate unnecessary risk. We do that by having both a buy and sell discipline. Does your advisor do that? If you think it's time to work with an advisor who puts your interests first, it's time for real investment advice. RIA Advisors, 855-RIA-PLAN. RIAadvisors.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
Starbucks is giving away free red cups. So if you order a special coffee at Starbucks, chestnut praline latte, which is, by the way, about 900 calories, they'll give you a free red cup. And the cup is reusable, so this is a good thing, right?
The Real Investment Show podcast. Same show, your schedule.
I've never been to Starbucks to order a cup of coffee. They say, oh, by the way, when you're done, can I have the cup back?
At realinvestmentadvice.com.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
Real Investment Show podcasts are now available from Stitcher Smart Radio at Stitcher.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA Advisors to work for you managing your 401k plan. It's a quick and easy application. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show YouTube page has all of our videos ready for your easy access. From 3 minutes on markets and money to each day's radio shows. Subscribe and bookmark our YouTube channel for The Real Investment Show. Or just click on the show links at realinvestmentadvice.com. Realinvestmentadvice.com.
You're listening to The Real Investment Show.
And welcome back to the show this morning. It's 6:33 on this Tuesday as we get ready to head into Thanksgiving. Tomorrow is going to be a very light day in terms of the markets because everybody's already gone. Mentally, they're gone today. Physically, they'll be gone tomorrow. Thursday, they'll be, stuffing their face. And then Friday's a tryptophan-induced coma day. So, that's, this week is pretty much done today. Brent, when you do Thanksgiving at your house, right? Does, all the kids, family come over?
Sometimes depends on which year.
Right? Is it this year?
I'm traveling this year.
Where are you heading to?
Nash Vegas.
Nash Vegas, like it. So are you taking any food there with you?
Yes.
So what is your dish? Do you have a dish that you cook every year?
We did not rehearse this, ladies and gentlemen.
I know.
I am bringing a box of Death Wish coffee K-Cups.
That's what you're bringing.
My contribution.
See, my thing is I started doing this about when my kids were little. Because they like mashed potatoes, so I started making these 4-cheese mashed potatoes, and every year they demand that I make these potatoes, right? So
4 cheeses.
4 cheeses.
Wow.
Yeah. Oh, they're just they're not for dieters. So, but they're very good, right?
Yeah,
so, but every year that's the demand. It's like the first thing that comes up is like, okay, Dad's making potatoes. What else are we doing, right? So it's all good. But my wife's father, right? My father-in-law, he makes the stuffing every year. Right? Do you ever have anybody in your family that makes some dish that nobody really likes?
Yes.
Yeah. And every year they bring that dish anyway?
It's the green bean salad that's kind of scary looking.
Okay. So every year he makes this stuffing, right? In the back of the stove where nobody can see it, there is always a pot of stovetop stuffing. Out of the box, right? That gets eaten first.
Yeah, just in case.
Just in case. But no, it's gone. It's like, and nobody, right? It's a family secret. There's only a few people that know what's in that pot that's in the back of that oven. And it's the stovetop stuffing. And so you'll see people sneaking in there, getting stuffing on their plate, trying to avoid.
Looks good.
Trying to avoid the one dish, right? So this is all going on at our house this year.
Mm-hmm.
So
yeah.
So everybody's coming over on Thursday.
To the new Robert's Digs.
Exactly. Well, so here's the other thing too, right? So I was listening this morning that turkeys are plumper this year, right?
Really?
Turkeys are bigger. So when you go to buy your turkey, they're bigger this year.
And of course, the per pound cost is higher.
Well,
so
the per pound, but because of the supply chains and all that type of stuff, turkeys were sitting around longer before they were getting slaughtered and sent, so they grew bigger, right?
Yeah.
So when you go to buy your turkey, you're going to get a little bit fatter turkey this year.
Should go a long way.
Yeah, and which means that when your wife is there and picking out the turkey, you don't say get the plump one, right? You should say buy that one. So that's gonna. But see, we don't eat turkey in my house.
No,
I don't like turkey. Never have.
No.
My dad never liked turkey. I've never liked turkey. It's dry. It's one of those things. So we always do. While everybody's trying to scramble over the turkeys, we're buying brisket.
Yeah, baby.
So
that's what I'm talking about.
We have brisket, and my wife always orders, like from Honey Baked Ham, she'll order a small turkey breast.
Token turkey.
It's the token turkey breast, right? But generally, it's mostly ham, brisket, sausage.
So you
ribs.
don't think you'd like smoked turkey?
No, I like smoked turkey.
Yeah.
Right. And fried turkey's okay. Yeah. But I'm just it's okay.
Yeah.
It's
not the first choice.
Yeah. If you put a fried turkey on the table and a pound of brisket, I'm going for the brisket. I'm just it's like I'm from Texas, okay? So
that's right.
Yeah, exactly. So anyway. All right.
Good luck to you.
Turkey stories. It's Turkey Tuesday.
Now with the plumper turkeys, does that mean that Thanksgiving leftovers are going to last longer this year?
Yeah, they better, because you're going to pay $54 more this year for a turkey feast than you did last year.
Zounds.
For people for 10.
Yeah.
Something like that.
Yeah.
It's 54 more.
Mm-hmm.
Inflation, baby.
That's what I'm talking about.
Exactly. It has nothing to do with gas prices.
But we digress.
All right. So just for the break, I was talking about, just recently we passed the Build Back Better bill, right? So, all right. So we passed the infrastructure bill, $1.2 trillion. Now we've passed in the House, clear. In the House, we passed the $1.7 Build Back Better plan. Here's the issue with this. So, first of all, there's already provisions in the Build Back Better plan that are going to get some rejections in the Senate. A couple of them are for political reasons, but particularly one of the things that's in the Build Back Better plan can't be used during the reconciliation process. Now, we have to go back a little bit. We've talked about the reconciliation process before. But the reconciliation process has to be done under the budgetary rules. This is part of the budget process. So just to clarify the difference, if I want to pass a bill, I can pass a bill on anything, right? I want to pass a bill to put green cheese in a rocket ship and send it to the moon just so I can tell my kids the moon is made of cheese, right? I can pass a bill for $1 trillion to do that because that's what it would cost, right?
Not 4 cheeses?
Not 4 cheeses, just one.
Okay.
Blue cheese.
Context.
Exactly. So I could pass that bill, but that bill has to go through the normal voting process. I pass it in the House, it goes to the Senate. The Senate will need to pass it with 60 votes because that's what they've chosen to do. And that's how that bill would get passed. However, if I want to pass a bill with only a 51 vote margin, then I have to do it under the budgetary process. So that budgetary process is the House writes a budget, they send it to the Senate votes on it, and for the budget process, they only need 51 votes. So in this case, the Senate could pass whatever spending bill that the Senate can pass any bill that the House proposes with just 51 votes, as long as it's part of the budget process. That has to be done under what's called reconciliation. This is where basically the Build Back Better plan is being done as part of the budget, and it's sent to the House. The House sends it to the Senate makes their changes, and then it goes back to the House to be voted on with the new changes, and that's called reconciliation. So they reconcile the two proposals together and send the budget to the president to sign. Okay, so that can be done with 51 votes, and the Democrats have that. They've got 50 senators, and they've got Kamala Harris, which would be the tie-breaking vote as vice president. Okay. Why is all that important, and who cares? The reason it's important to understand is that the items that go into the bill have to be budget related. That's the key point. There's going to be a difficult process here trying to get immigration reform that they want to do, that's in the bill, by the way, passed, because it's not actually part of the budgetary process. So that's going to be one of the issues that they're going to have difficulty trying to get passed through. And of course, there's been lots of speculation on the whole immigration part of the bill anyway. Giving money to illegal immigrants is kind of a thorny thicket to run through. So that's going to be, but because it's not part of the budgetary process, it's probably going to have to get stripped out of the bill. Paid leave, infrastructure and climate spending. As an example, there's about $28 billion in hard infrastructure spending and tens of billions in fundings for electric vehicles on top of the amounts of the recently enacted infrastructure bill. There's going to be some centrist Democrat opposition to that, including provisions that were supposed to have been dealt with only in the earlier infrastructure bill. State and local taxes, this is another one that's going to be a bit of a problem. So the state and local tax deduction, we've talked about this previously, used to be $10,000. So before the Trump administration, if you lived in an income tax state where you have a state income tax, you could deduct $10,000 of that on your of the state and local tax. You could deduct $10,000 of that off of your federal taxes. So you got a tax deduction, so to speak, on your federal income taxes because you paid state and local. They've now increased that to, don't quote me on the number, but I think it went to $80,000, somewhere around there, $72,000 to $80,000, something like that in the bill. Now, the problem with that is, and we talked about this before, is that non-tax income states like Texas, as an example, or Florida, where you don't have a state and local income tax, those taxpayers are subsidizing people that live in state income taxes, states with income taxes, because, again, the taxes have to get paid. And if people in a state and local income tax state are getting a rebate on their federal taxes for the taxes they paid locally, we're paying taxes locally as well. We just don't call it a state income tax. We call it property taxes. That is being subsidized through the federal taxes that we're paying, because states without a state and local income tax, they don't get a break, right? They're paying all their federal income taxes. So that's a bit of another kind of one of those thorny thickets that may run into some opposition. Also, of course, this whole idea that you're providing the wealthy another tax break is not going to go well with some of the centrist Democrats. So this all kind of sets up potentially for a cut down in the current Build Back Better plan. And what Goldman Sachs is estimating is that sets up potentially the opportunity for the Democrats to pass another spending plan next year going into the midterm elections to try to essentially buy votes. Come back from the break, wrap up the show. Don't go away.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
Retirement's not what it used to be, and long-term care could enhance your golden years. The question is not whether you can afford it, but whether you can afford not to have it. Our next virtual Lunch and Learn will cover the management of long-term care expenses that could make or break your retirement. Join Jonathan Penn and Chris Liebum for the basics of long-term care. Register at realinvestmentadvice.com for our virtual Lunch and Learn on long-term care. December 9th at noon. realinvestmentadvice.com.
Do you know what you don't know when hiring and retaining quality employees? Compensation is more than just wages. It's personal time off, the vacation days, healthcare benefits, a 401k. Do you know what's important to them? Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Let us show you how to make the most of an affordable, effective package that will deliver true value for your business and your employees. Call me toll free at 855-RIA-PLAN or online at realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Get started right now at the website, realinvestmentadvice.com, or simply call our toll-free number, 855-RIA-PLAN, simply online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
The Real Investment Show.
You know, they say that what happens in Vegas stays in Vegas, right?
Yes.
Yeah. As it turns out, while I'm reading just headlines this morning. There's been a bunch of really good headlines this morning. Some jobs are still in huge demand. The headline goes, as it turns out, while many employers are struggling to find workers, some jobs are still seeing huge demand from potential job seekers. One of those jobs, as it turns out, is in the field of a Las Vegas exotic dancer. According to TMZ, Club Ice is a new strip joint in Vegas as its owners hosted open tryouts for dancers this week at Bloom Lounge on the outskirts of the town. TMZ was told that more than 1,000 girls signed up to try out. In fact, pictures, scenes from the event, there's like, it looks like church, pretty much. It's like a big open area, like a big arena type thing, right?
Yeah.
And they've got these folding chairs just set up, and there's just all these girls sitting in these chairs watching other girls dance and try out, right? So they're just got 1,000 girls signed up. Well, it starts to get a little bit rowdy. Obviously.
Yeah.
Get a little bit rowdy. In the video obtained by TMZ, viewers can hear one of the event organizers telling everyone to take a step back to avoid an Astroworld crush situation because, they're all getting out of hands. He can be heard yelling at the crowd, y'all going to try and trample each other? Y'all not going to be suing me. Sit down.
An Astroworld event. Wow.
So, you know, if you're having trouble finding a job, Las Vegas is hiring. Brent?
Ain't gonna happen. Not gonna go there.
Not gonna go there.
Wouldn't be prudent.
No, not at all. But like I said, just, you know, these are things that you will only see at this phase. You know, this is gonna be one of these events we're gonna look back in a few years and go, what the hell were you thinking?
Tryouts for Vegas showgirls.
I know, right? You know, they're known
What could possibly go wrong?
Nothing. And look, girls are known to travel all around the country. They run circuits, right? And because they're always looking for fresh customers. And, you know, we talked about this on the show before when North Dakota, as an example, these little small towns in North Dakota were hitting these kind of shale oil filled booms, right? And this was during the boom times in shale oil fields. All these strippers would show up because you got all these roughnecks with just wads of cash because there's nothing to do in these small towns, right? I mean, they're literally drilling in towns where there's like a grocery store, a bank, and a gas station, and like 4 houses.
And the gas station is the grocery store.
And the gas station, and the post office, right?
Hey, it's supply and demand manifest.
It is.
Yeah.
And so these girls would make these trips, and they would just clean up money. So again, they're known for traveling around. So when this new club is opening up, they're all showing up because it's going to be the hot new club, right?
Yeah.
So.
I once worked with a physical trainer at a gym.
He was a stripper? Or
He was not.
Oh, he was not.
But
Okay.
interestingly,
Yeah.
because of Houston's reputation as that kind of place,
Right.
He approached several of these women and said, look, if you will let me train you, you will have a longer career and you'll make more money.
Genius.
Yeah.
There was my wife and I went to this comedy club here in town, and they do skits, and it's a 3-man skit. Now this was a while back, right? In fact, this was when Bush and Clinton were running. Not Clinton. Gore.
Oh, okay.
Bush and Gore were running for
yeah.
president, and the skit is that Bush and Gore were coming into town to campaign, coming into Houston, and so as the whole skit was each one of the guys was the taxi driver and the other 2 guys were the presidents. And every time they would get into the taxi drive, there you go, I need to go here for this event, wherever that event was. And the taxi driver would say, well, what strip club is that next to? And that's how they navigated the entire city of Houston was by, where are you going and what strip club is that next to? Because if you knew that, you knew exactly where to go to.
Sad but true.
It's sad but true. I'm not sure it's that way. I don't know if it's that way anymore. It was back in the early 2000s, late 90s, early 2000s.
Yeah, go 90s.
Sure.
Yeah.
I'm not sure it's still that way today, but
I never knew.
yeah, liar. Ask your son. He knows.
He was in Hunts Vegas of those times.
Really?
Yeah,
Gotcha.
in college.
All right. Let's get back to the show. Got some point taken here. Sorry for the divergence.
This is what happens on the day before Thanksgiving.
I know, right?
Yeah.
It's just we're running out of material here pretty quick as we kind of get ready to go wrap up the show. A couple of things though to remind you. So, one of the things that kind of keeps going on here, and again, we've talked about this on the show several times, and we've been writing about this a lot lately, is about interest rates. And there's a lot of conversation right now about interest rates going up because we have inflation. Interest rates have to go up because interest rates are low, and interest rates have to go up because we have inflation, and that's not necessarily true. In fact, right now, if you pay attention to what's going on, yes, interest rates are going up on the short end of the curve, but the longer end of the curve is really not going anywhere, and we're starting to flatten out that yield curve. And part of that is because if interest rates start to rise in the long end, you have a very highly leveraged economy that is dependent upon low interest rates in order just to maintain economic activity. And we've talked about this before, and in fact, we touched on this in this past weekend's newsletter as well. We have more companies now than ever on record that are dependent upon low interest rates to refinance debt in order to stay alive. This is what we call zombie companies. Zombie companies feed on cheap debt to stay alive. And if interest rates go up and they can't refinance their debt, you're going to have a massive amount of bankruptcies coming through the economy. This is why the Fed was so quick to act during the pandemic shutdown, is all of a sudden these companies were locked out of being able to get access to credit. And this is why they were talking about bailing out airlines and bailing out rental car companies, bailing out all these, bailing out all these different industries, and that's why the Fed started buying junk bond ETFs, is so it provided a facility for the issuance of debt for these companies so they could stay in business. If they weren't able to refinance that debt at low rates, they would have gone out of business. And that's the real risk that we run. And that problem has not gotten better, by the way. It's gotten worse. because the policies that we've been running are teaching everyone, not just investors, but business owners and CEOs, et cetera, that there is no risk in taking on more risk. In fact, it's kind of one of those stories where, if you owe the bank, we've talked about this story, the old story is if you owe the bank $100,000, it's your problem. If you owe the bank $1 million, it's their problem. And that's kind of the idea now, is that some of these companies have so much debt outstanding, the banks can't afford to let them go out of business because they can't take on the default rate. So that's why every time we get into financial trouble, you see a lot of activity by the Federal Reserve and other entities trying to bail out these companies to try to protect the banks that took on all this excess risk of lending money to companies that really couldn't afford to pay it back. And we're seeing this to a large degree of what's happening right now. I went and hosted a mergers and acquisition event last week. And the general conversation was, man, everything is great. We have more business than we know what to do with right now. Money is just literally laying in street corners. If you need money, just, go look in any gutter because there's just money laying there waiting for you to pick it up. And when you're in that type of environment, what happens is you wind up funding a lot of companies that you shouldn't fund. And we see this almost every day with companies going public that make no revenue. In fact, we have more companies going public right now that have no revenue than we did in the late 90s. Company came out the other day that their IPO went up like 120%. They make $35,000 a year in revenue. So that's the problem here. You have a lot of speculation in the markets, a lot of risk. And it's because we simply have so much liquidity that's flowing into the markets, and there's just money coming in from everywhere, and it's just hard to fathom where all this money's coming from. And the question is, and as I said before we left the break, is what happens next, right? That's the question. This money flow that's coming in, it will end. It's just not going to maintain this pace of inflows into the markets and the economy indefinitely, right? The money's got to come from somewhere. And yes, it's coming from debt is where it's coming from. But there's a limit to that debt. Where's the limit to that debt? It's when interest rates start going up, and the Fed is already talking about raising interest rates. Or maybe the real question is that the Fed can never raise hike rates at all. Maybe it's all good rhetoric at this moment that, oh yeah, we're going to hike rates 3-4 times next year to combat inflation. But reality is they really can't. Not without causing another equity market downturn. And that's the one thing that they don't want to do, because if you get a decline in the equity market, you impact consumer confidence, and consumer confidence is already weak because of inflationary pressures. So you've really the Fed's really got themselves into a very, very tight corner here that really doesn't have a lot of room for error. Yet that's probably the one thing that is going to be the big issue in 2022, which is going to be a policy error. But don't worry about that right now. We got Santa Claus rally coming up. Look for a bit of a pullback in the market over the next couple of weeks. Not much, 1, 2, 3%, whatever. A little bit of a pullback. Use that as an opportunity to put some capital to work. Make sure and do some of your tax loss harvesting. Be sure and sell your losers for the year. Set those off against some of your gainers. Rebalance your portfolio. That's always a good, prudent exercise as we get into the month of December. Help reduce your taxes for next year. I'm sure Danny and Richard will talk about that here on one of the Friday shows coming up as well. Get by the website, realinvestmentadvice.com. Our Santa Claus Rally article is out. realinvestmentadvice.com. See you tomorrow.
It's a rich man's world.